and welcome to The Trade. Before we get to the charts, let's take a look at what traders are watching. Well, Ukraine's Volodymyr Zelensky has said he believes he could salvage his relationship with US President Donald Trump after their explosive meeting in the Oval Office, but that talks needed to continue behind closed doors. US Commerce Secretary Howard Lutnick says the tariffs on Canada and Mexico will go into effect on Tuesday, but that President Donald Trump will determine whether to stick with the planned 25% level. Israel has blocked the entry of aid trucks into Gaza as a standoff over the truce that has halted fighting for the past 6 weeks escalated, with Hamas calling on Egyptian and Qatari mediators to intervene. China's manufacturing activity expanded at the fastest pace in 3 months in February as new orders and higher purchase volumes led to a solid rise in production, according to an official factory survey. President Donald Trump has said the US will create a crypto strategic reserve that includes major cryptocurrencies like Bitcoin and Ethereum, boosting crypto prices. Let's get into the technicals now, and Gary Glover from Novus Capital joins me. Great to see you, Gary. All right, let's start with the S&P 500. What have we been seeing there?
Yeah, I mean, the S&P 500 is a really interesting chart there from a historical perspective, in that if we look at if we go back to the 0709 bear range, that if you expand that range, so the theory around range expansion is if a market sort of moves in a certain range, once it actually breaks out of that range, it'll expand, usually by the same size of that range or maybe a portion of that. So usually it's sort of like it might be 50% or 100% of that range, and those are sort of key levels. So since the 0709, every high since 2009 has been an expansion of that range. And it's interesting that we are at the 500% expansion of that range here with the current high. Now that sort of coincides with, if you look at the 2020 high in the 2022 high, that range there sort of pulled back 50% of the range, and now it's expanded 50% of that range to the same level. And it's 100% expansion of the previous range as well. So we've got so many expansion previous ranges that are all expanding out here at key levels here around this sort of 6130, 6140 level. So in the past there, when you see those really key expansion points, the market normally finds strong resistance at this level. In the past, every expansion point since 09, the market's been stopped in its tracks for at least 6 months. So it doesn't always doesn't stop the market going further. What it does is act as resistance, and in the past there, it's been a resistance level for at least 6 months. So each expansion point, the market sort of hit that level, and it's taken 6 months to actually to break that. Oftentimes they pull back, or they might contract under the range there. So just tells us here we've got a really, really important expansion point there for the S&P. It's the same for the Dow. Dow's expanded 100% of the previous range. The Nasdaq's expanded 161.8. So got all the major US markets all hitting key resistance. So it just tells us here that we're likely going to contract here and pull back from these high levels, but it just means that we might be sort of in a contractionary phase. It doesn't mean we have to have a big pullback or a big aggressive sell-off. It just says that we're probably going to be in a weak state, maybe a contraction phase. The only good news I will tell you is that you look at every 5th year and every post-election year cycle, which where we are in currently, most of those have actually found lows in the 3rd month. So there's not many sort of years where we don't see a pullback in the 1st quarter and find some sort of significant low in March. So we do tend to see some deep March lows, but we do tend to see some really strong rallies out of that March. So just short term tells us that we're probably likely to go lower here over the next month, but probably not going to see deep corrections in these 5th years or in these post-election cycles. But this means that we're probably going to be a bit range bound here for maybe the next 6 months.
All right, and coming back home, how is the ASX 200 looking?
Yeah, XJ is interesting there. That has expanded that previous range. So again, we've sort of done 100% expansion of the 2023 range. And the market was sort of caught in that sideways band for almost sort of 2 years, really, before we broke through 7,600. So again, we've expanded to the new level. Recently, we pulled back from that just under 8.6, and then expanded again and went to a marginal new high. Now we're expanding back lower here. So it does sort of suggest that we'll pull back here again into that sort of March, April window. It's just, I don't know what it is, but if we go back and look at every fifth year and every post-election year, there seems to be some sort of broadening pattern and some weakness into the first quarter in probably around 90% of those years. So it just tells us here that we're probably just, we've had a couple of good strong years in the market, so just might see a little bit of contraction there. But good news is we typically don't see deep corrections in these sort of fifth year of the cycles and also the post-election years. They do tend to finish pretty firm towards the end of the year, but does indicate to us here they're probably just likely to see a bit of a pullback there. I think we're looking probably around that 8,000 mark is a level there. Just I'm probably more worried about growth and financials there. They're probably the sectors that are looking pretty vulnerable there. We've definitely seen some heavy selling and signs of distribution in the last few weeks there.
Great to get your insights, Gary Glover from Novus Capital there. That does it for this episode of The Trade. Be sure to join us tomorrow.